Hi, this is PR Sundar. Welcome to this special episode where I'm going to talk about how to buy shares at a fair value. Why it is necessary topic right now, and because many people ask me one question. Sir, markets are trading at all-time high, and that means all the stocks are overvalued. And if we buy the shares now and tomorrow if there is a correction and market may fall so much, we may lose the money. Sir, how to know whether a share is fairly valued or overvalued? Let me tell you, I don't believe in this all-time high. Every time we are shouting, today Nifty all-time high and this and that. And the reason, let me tell you, in developed economies like Japan or US, the flash news will come, today we hit all-time high, everybody will clap, everybody will be happy. Why? Because all-time high means your shares are at all-time high, you are in profit. But the same thing cannot be said about emerging markets or Indian markets. Just to give you one example, you buy a share for 100 rupees. And after 10 years, if it reaches 101 and that becomes an all-time high, but definitely you will not be happy because 10 years before, had you put 100 rupees in bank, you would have got 200 rupees now. What is the big deal about getting 101 or 105? But whereas in developed economies, the interest rates are very, very negligible, 0 or 0.05, something like that. So that interest component is not a big deal for them. So therefore, even if it is 101, they are very happy. So therefore, I don't believe in all those all-time highs. And even when Nifty is at all-time high, you can find many stocks which are fairly valued. So what is fairly valued? What is intrinsic value of a share? First, I'm going to show you what Investopedia says. What is the intrinsic value of a stock? Intrinsic value is a philosophical concept wherein the worth of an object or endeavor is derived in and of itself, or in layman's terms, independently of other extraneous factors. Financial analysts built models to estimate what they consider to be intrinsic value of a company stock outside of what is perceived market price may be on any given day. So it looks very confusing, right? So simply speaking, intrinsic value refers to some fundamental objective value contained in an object or asset or financial contract. If the market price is below what value, it may be a good buy. If above, it's a good sale. So simply speaking, we have to calculate the fair value of a share. And if the market price is trading lower than the fair value, that means it's a good buy. The people who buy those shares are called value investors. When evaluating the stocks, there are several methods of arriving at a fair assessment of a share's intrinsic value. Intrinsic value or fair value, how to arrive? So there are many methods. And here I'm going to show you 3 methods highlighted by Investopedia. One is called dividend discount model. Look at the formula, I feel like fainting. And then residual income model, and then discounted cash flow model. This discounted cash flow model is a very famous model. But again, don't look at the formula. That looks more confusing even for a mathematics teacher like me. So first thing is that fair value is the correct value of a share. How to calculate? There are many methods. Do we want to calculate? Surely no. But then what to do? If there is anyone who has calculated it and tell us, and these are the value stocks, or the stocks which are trading at a fair value, better we can go and buy those shares. Who has got the time to take this formula and work out everything and all those things? And myself, I'm looking to invest in some stocks. Being a trader, I don't think that I can spend so much time in analyzing the fair value on this and that. Then I thought, how I can identify those fair valued stocks. Then I remembered a Smallcase. You may remember few months before I have done a promotional video for this company called Smallcase. And Smallcase, they just give a portfolio of stocks based on certain themes. If I am not wrong, last time I introduced Dividend Aristocrat. That was a theme I have given. So now, because the markets are all-time high, I am interested to know what are the value stocks. So what I did, I logged into their app. So here I found growth at a fair price. You need to have a growth stocks. At the same time, it must be available at a fair price. And the minimum amount you need to invest in this is only 11,800 rupees. Yeah, that's a very small amount. And look at CAGR. So 19.16% CAGR. That's a fantastic return. Maybe let us see. Yeah, this portfolio was created in April 4, 2016. From 2016 to 2021, 5 years, it is giving a CAGR of 19.16%. So that's a fantastic return. And look at the overview. Constituents of this Smallcase were last reviewed on June 16, 2021. Will be next reviewed on September 2021. And maybe we are interested in looking at the stocks and weights. So here, Chambal Fertilizers and Chemicals, LT Foods, JK Lakshmi Cement, KNR Constructions, Kirloskar Ferrous Industries, Polyplex Corporation, SH Kelkar Company Limited. So these are the stocks available in this and mostly comprised of a small caps. No large cap, no mid cap. And usually in a bull market, small cap stocks tend to outperform the large caps. Moreover, here I like fertilizer and agrochemicals companies because monsoon has been good for the last 3 years. And you know, for the last 1-2 years, it is a specialty chemicals which are ruling the markets, darling of the markets. SH Kelkar is a specialty chemicals. And so these are the stocks and weights. And if you look at the overview, you look at the chart. So here they are not comparing and this one with the Nifty, and they are comparing this portfolio with small cap index. So compared to the small cap index, so these stocks have done a huge outperformance. So I find this Smallcase growth at a fair price as a very interesting one, and that is why I have shared with you. And those who do not know about the Smallcase, maybe I can give a little bit introduction. So Smallcase construct a lot of portfolios and call them as a Smallcase and put it under different headings, titles. And you like this one, let us say growth at fair value if you want, you can just go and click there itself buy and the shares will be bought. And of course, you have to enter into Smallcase site using your broker's username and password. And for each Smallcase, you place the order through Smallcase, you may be paying 100 rupees plus GST as the fees to Smallcase. That's a very small money for the kind of work that they are putting in. Then you may ask one question, sir, after looking at the Smallcase, why not I buy directly from the broker? And number one, if you buy directly from the broker, you have to place orders individually for all the stocks. That is number one. Number two, what is fair value today? A particular stock trading at a fair value today, maybe after 3 months it may not be trading at a fair value. It may become overvalue. So in that case, we have to remove those stocks, we have to bring in other fair value stocks. So that is what Smallcase call it as a rebalancing. So every 3 months they do rebalancing. So if you buy through Smallcase, so that rebalancing also take care automatically. All you have to do, you have to just click accept when the rebalancing comes. So it will be rebalanced. If you think that markets are near all-time high and it is going to be very difficult for you to find the fair valued stocks, so this is one way you can find a fair valued stocks. So this one I liked it, so therefore I have shared it, and of course this is a promotional video which I have done for Smallcase. Hope you enjoyed watching the video. Thank you for watching.